Netflix is scheduled to report third quarter 2024 earnings results after the markets close on October 17th. That has a lot of investors asking if they should buy Netflix stock before that day. I'll answer that question in this video, as well as provide a preview of what investors should expect from Netflix in its upcoming earnings release. Of course, I've had Netflix rated as one of my top stocks to buy all year long in 2024, and it's been one of my better performing stocks. But let's take a look if I still feel that way upcoming this earnings release.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with what Netflix investors should expect from the company in the upcoming earnings release. Netflix told investors on July 18th that they now expect full year 2024 revenue growth of 14.5% at the midpoint. That's up from 14% at the midpoint in their previous expectations. Netflix also saying they expect an operating profit margin of 26% versus 25% previously estimated. Netflix's year is going much better than expected so far year to date in 2024, and management is raising expectations for the full year. Netflix's stock price has performed exceptionally well year to date in 2024. It's trading at $718 per share as of this recording. That's up from less than $500 per share to start the year. Of course, I'm happy about that, as I've had Netflix stock rated as one of my top stocks to buy. You can see here that Netflix has been rated as a top 25 stock to buy on my list here, and I last updated that recommendation on September 1st, letting investors know that I still thought Netflix was a top stock to buy then. Netflix saying that they're making steady progress scaling their ads business, and ads tier membership grew 34% from the previous quarter. They're building an in-house tech platform that they're testing in Canada, and they'll launch more broadly in 2025. For more than a decade, Netflix resisted having an ad-supported tier. They were mostly an ad-free streaming service, and now with the addition of advertising, it gives consumers a lower priced membership option, and it looks like consumers don't mind watching some ads in exchange for a lower monthly price. Netflix is finding that out now with robust growth in its ad supported membership. Also, remember in the last year, Netflix has cracked down on password sharing, forcing people that previously were sharing accounts with people outside of their households to now consider paying for their own Netflix membership. This comes right as Netflix offered this lower price tier. So some of those folks that were kicked off of those accounts that they were sharing might choose this lower priced ad tier to sustain access to Netflix. It's working really well so far in early days for Netflix. For the third quarter specifically, Netflix is forecasting 14% revenue growth and 28.1% operating profit margin. If the company hits that target, that would be a significant increase from the 22.4% operating profit margin in the third quarter of 2023. I've talked about this extensively. Netflix's business is very foundationally built for economies in scale. It doesn't cost Netflix any more money if 100 million people watch a movie or if 10 million people watch a movie. And so the incremental subscriber additions and the incremental revenue additions really lift Netflix's profit margin. As you see here over the last couple of years, the operating profit margin soaring up to 28%. These are robust operating profit margins. I remember just a couple of years ago, Netflix was targeting an operating profit margin between 18 and 20%. And now they're reporting operating profit margins close to 30%, really nearly 50% above their previous expectations of where their long-term operating profit margin will be. I've talked about how this is a very attractive industry for investors as competition is easing significantly as well. This is like the opposite of what you see in the electric vehicle or in the car industry. That industry, I talk extensively about how unattractive it is for investors, given all the dynamics working against investors. It's the opposite in the streaming industry. Streaming content providers are collectively raising prices, cracking down on password sharing, decreasing content budgets, and those are all good news for investors. On top of that, the industry is experiencing a tailwind because it's so much more convenient to watch your content from streaming access compared to cable access, where you have to be at home or in your office to watch the TV. It connected you, it tethered you to being in one place to watch your content. Additionally, the convenience also increases demand for consumers because now people can watch content anywhere they have internet access. So when they're taking the bus to school or when they're on campus in the library, wherever you might be that you can get internet access, you can watch content, and that creates an increase in overall demand for content. It's truly an attractive industry to invest in. You can understand why I've had Netflix stock rated as one of my top stocks to buy here in 2024. And I've had Netflix stock rated as a buy for several years now. A couple of important metrics to consider with Netflix: global streaming paid memberships increased by 8 million. The company added 8 million subscribers in the latest quarter, and its free cash flow generated was $1.2 billion, which is great news for Netflix because the company is spending billions of dollars on content and still generating positive free cash flow. Another great thing about streaming companies like Netflix is the money they spend on content will last generations, will last decades, right? A movie or a show that Netflix creates, for instance, Stranger Things, it can be viewed by people for 5, 10, 15, 20, 25 years. It'll be on the platform and people will undoubtedly be watching that, even if it's not as many people watching it as are watching it today. But that movie, that show will create revenue for Netflix for 5, 10, 15, 25 years, and it spent money on it one time, and it gets to generate content for decades. And so it's building its business, it's building long-term revenue while still generating positive cash flow. Netflix is trading at a forward price to earnings of 31, which is the most expensive this stock has been going back all the way to 2022. So the valuation is increasing, although I still think the valuation is relatively cheap. Now, to answer the question, should you buy Netflix stock before or after earnings? Typically, I tell investors to split their purchase in half if they're interested and they're kind of having a dilemma. Should I buy it before or should I buy it after earnings? If you're thinking about spending $1,000 on Netflix stock, I would say split it in half. Do 500 before earnings and 500 after earnings if you're having a dilemma. Sometimes when the valuation is cheap enough, I will advise people that it's so cheap that the risks are to the upside, not the downside. With Netflix, I feel the risks are equally weighted, and so you can go before, you can go after. It really doesn't matter in this scenario because of Netflix's enriched valuation. Still, longer term, I'm extremely bullish on Netflix stock for all of the factors I already highlighted in the video. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.